The official sector trends. Looking back 10 years, someone would have had a hard time trying to convince you that you would have to switch to virtual learning or mobile banking or wearing of masks and social distancing to curb the spread of a virus. Now, the COVID-19 pandemic has set a change in the way in which we work, learn, and even relate with one another. It has rummaged through every part of our lives and brought adverse effects. Now, the pandemic is not only a health crisis, but also turning into an economic crisis. Now, the economy has been hit hardest, with the virus forcing thousands of people across the world to lose their jobs, with others being forced to work from home. But the economy is slowly reopening and adapting to the formalities of working within the COVID-19 measures. Today, we found out how are SMEs coping with the post-COVID-19 and available growth opportunities. This morning, joining us to aid with this discussion is Simon Ndungu, who is the Chief Retail Banking Officer at Family Bank. Mr. Ndungu, good morning, sir.
Good morning, sir, and good morning, viewers.
Happy to have you around.
Thank you.
All right, let's start by understanding, Mr. Ndungu, where we are as the SME sector.
Thank you, and once again, good morning, viewers. As a country, we've been through a lot with the development, especially what happened in 2020, the infamous March 13th. The COVID was real, lockdown followed, and schools had to be closed. Remember, even the economy had to grind to a halt within the international space. All the planes were stopped flying. Not forgetting also other key sectors within our economy were affected. Remember, even the landlords had to be affected. CBK had to come into play in terms of even looking at even allowing people to use mobile money transfers, the social distancing within even our space within the banking halls, not forgetting even the sitting space within the transport sector. A lot had to change. Remember, even within the hotels, not forgetting also the schools, everyone now had to use, especially using the masks, the sanitizers, not forgetting even the testing of temperatures within, even as we enter buildings and using it to access places. So SME sector had to be affected in a major way. Why are we saying this? You find that majority of our SMEs, they're either in trade, transport, in agriculture, in the international space. Kenya, we are net importers, so people who are doing import business were really affected. The people within the flower farms, the layoffs. So actually, in terms of employment, a lot had to be affected and people had to be laid off, as you rightly said. So looking into 2021 as Family Bank, the economy seems to be positive.
Yes.
There's a lot of positivity, and when you look at it, even in terms of even the revenue collection by KRA, they met their January target. So it tells you the economy is slowly opening up.
Yes.
Yes, there are those sectors that have been affected, and there are those sectors that are actually thriving. So it's brought in a lot of innovation within the country. And also, even Kenyans are very resilient and innovative. So you find that even in terms of local manufacturing, people have come up with innovative ideas to make sure that they actually support their livelihood.
Yes. All right, Mr. Ndungu, let's therefore talk about exactly the way in which we look at the MSME sector within the country. We got to talk about that credit availability in the sector. There has been a continuous conversation, especially each time we start a financial year. And now the COVID-19 pandemic came in, and well, there was this approach from the lenders in the country that you have to think twice because the level of risk was actually heightened by the COVID-19 pandemic. Has that changed as we're approaching 2021? And what are the indicators that we're looking forward to say, wow, the banks now are looking at this sector differently as they were in 2020?
One thing I must attest to is that the economy has been affected.
Yes.
The people in the business space have been affected. So, as I said, some sectors that were actually affected, that the banks had to quickly come into focus and support this SME space. One, by restructuring their loans, giving them a moratorium guided by CBK, and also even looking at opportunities where they can even support them more.
Yes.
For the sectors that are winning, especially the sectors within the medical space, remember the medical came into high demand because of the hygiene, the thermal guns, the sanitizers, and even people looking towards getting clean and affordable health services. That's a sector that was winning. Remember also technology started now getting more attractive. Remember what we are doing now currently, even interacting on Zoom, more physical meetings, interacting even through technology. Then the use of technology now came in play. Any SMEs that was playing within that space then was a plus. Other sectors that were also even thriving is people within the retailing, people who are dealing with food supplies, anything that matters food, and also matters even maintaining livelihoods. These sectors are actually thriving. So those sectors have not been affected, and actually they've been doing very well. So sectors that were affected, and actually I'm looking at the SME space, we find that especially the schools,
Yes.
they had to close down. So private schools now are back, all the schools are back to learning. Then it tells you now, besides the digital learning, now these people will require more financing. So within the SME space then, these are the people now we've come back, recalibrated ourselves even as a bank. They've also have come up into plans, because remember, being out for 9 months without any business is a school, because you close in March now, coming back in January, you need some financing. So we've partnered, and we've had a very good engagement with Kenya Private Schools Association, and now we are financing the schools just to revamp and also rebuild themselves.
Yes.
We have a financing arrangement or even excess of $1 million for even just their working capital. Remember, they have to expand their classrooms. Remember, they need water. They need to sanitize. They need to also to social distance. Also, they also need transport. Remember, moving of kids to school and back. So even through our asset finance, we're also financing our customers within that space.
Yes.
You also realize also people within the, especially the sectors that were doing, especially the import, we have a lot of business, especially from timber dealers and other customers who deal with the import business and come to sell local merchandise, all the people who deal with spare parts and products from China. Then these are people that had borrowed, meaning that they had facilities that were actually repaying. We had to consider them for restructures, extend the repayment period, even give them some moratorium. Then eventually now as they come back, we're actually financing them. Because remember, you are down today, but it's because of the situation that you went through in COVID-19 pandemic. So because now people are really actually getting out, they are those ones who still have to be affected, because definitely in any danger or any situation, you find that those people who bounce back, there are those people who may not come back. So then the discussions around those people who actually are affected deeply, then building them, helping them, working with them with the journey, because a lot of training, yes, we've been doing trainings. Why? COVID-19 is a situation that no one ever envisioned. So in terms of even literacy, telling them how to navigate this particular situation.
Yes.
Then we've done it through our business club, just to make sure that we provide that financial literacy, give them ideas, and also create a forum for them to network, to realize that they're not alone in this game. The banks are there with them, and also now even helping them to navigate at every level, because every sector is unique in its own way. People in agri, they are facing it in their own way. If you're in farms and doing now horticulture, you are facing it in your own unique way. If you're in your hospitality industry, especially the hotels, you know what happened, then they're facing it in their own unique way. There's people now coming up with innovative ideas to drive this particular agenda.
Yes. Mr. Bengo, let's move on. And then somebody was going to ask you this question as well. I mean, yes, we are talking about lending to the MSME sector. Do you think that, well, what you're going to do, I would say predominantly in this rebound stage, is coming up with specialized products that are going to fit the needs of the businesses now? And would you tell us what some of those products that you're coming up with as a family bank? And well, are they going to be a mainstay, or are we going to call it a COVID-19 product?
Well, you always build to adapt.
Yes.
This is the best philosophy, where you come up with products that can adjust and adapt to different environments and situations.
Yes.
And Family Bank, as our purpose, is to enable people to create and sustain wealth through access to flexible, affordable financial services. And as Family Bank, as we say, with you for life, positively transforming lives, and also winning with our customers, we have come up with products that they are meant for SMEs. Remember, SMEs are always taken to be a risky sector. Either they don't have security, that's a big challenge. They don't have access to capital.
Yes.
Other challenge, they don't have access to information, so they are very informal. The other part is that they don't have access to markets. So Family Bank, especially building the SMEs towards access to capital, we've actually looked at them from two perspectives. One, you find that they have ability to repay their loans, good turnovers, but they have no collateral. So from their work capital needs, then we make sure that we have quick turnaround in terms of access to credit, where we have even enabled our managers even people within the branch network, the 92 branches that you have currently, to come and walk in and get quick turnaround time in terms of accessing of their facilities. So empowering our managers to just support SMEs with decision making and also financing them. The other thing we look at is that because they don't have collateral, then we can have consideration. And this one brings in the aspect of financial inclusion, where we have the Africa Guarantee Fund in excess of $1 billion limit. Then our SMEs can actually, we can give them unsecured facilities, which is guaranteed now by the Africa Guarantee Fund. We also have insurance where we can even tell someone for performance bond and the people within the trade space, then 10% cash cover, then we cover you with the insurance up to 90%. So that one tells us now, in terms of even de-risking the SMEs, we do the risk transfer and also cushion them around that. Then looking at the other angle is actually these products now that you are coming up with. The unsecured lending, the asset finance to the people in the transport sector, the working capital solutions, and you're also even looking at SMEs from the perspective of their employers. Current SMEs, they are the future corporates. So for them to employ and pay salaries, we actually have a solution where we say that they can process salaries for you and your employees can actually access salary advance once the salary comes through Family Bank. And we have very good technology platform that is set up, and we are now encouraging even so many SMEs to just process their salaries so that we can cushion them. Remember, every time you find an SME, they have 1, 2, 3 employees, they're always coming to their office asking for some advance. Let Family Bank handle that with you. So looking at it from the other angle, in terms of international trade, we have so many solutions. If you are in, for example, your import business, we give you import financing. You want some working capital once the goods land. You want post-import finance for you to clear your goods at the port. Then we finance you around that. If you're doing export, the same. LC business, we also are facilitating that. You're not forgetting that majority of our customers are actually in supplies to supermarkets. Key supermarkets that you are actually working with, you find that you supply maybe within 90 days, that's when your payment comes through. Then for a period of 90 days, you don't have cash to supply. So we discount those invoices and actually free some cash for you to be able to supply, continue working with these supermarkets. Not forgetting other entities, even within the county space, the government, and also people within the trade sector. Because when you look at it at every pocket, an SME is actually available. So the whole value chain, we have solutions that cut across.
So let's talk about, I listen to you and I hear, you're quite bullish in the way in which this sector is bound to perform, or the way in which Family Bank is going to perform in that specific sector this year. But talk to me, what COVID-19 did, Mr. Ndungu, was that we saw this digital shift. And World Bank as well in their report says that one of the key challenges for smaller businesses in Kenya is, most of them are not digitally enabled. Is that also a stress from your bank to also migrate with these SMEs to this digital shift that has been further emphasized by COVID-19?
Thank you. Digital now has come to be a reality.
Yes.
You'll come to agree with me when the people in the village, whether educated or not educated, use of mobile money transfers is now a reality. Everyone knows how to use it and is actually getting accustomed.
Yes.
If you look at it from the global perspective, the companies that made money, the richest companies in the world, you find an inclination towards technology. Name it the Amazon, the Apple, not forgetting the Tesla. You find that now technology has actually become the core in terms of even doing business. When you place now at the enterprise level, and I'm looking at even what Central Bank did, allowing people to transact more within the digital space. Why? You are freeing people from COVID. You are also enabling them to do things at their convenience, and time is not a limiting factor. Remember, because of the curfew now, working at night has been a challenge. So even using your mobile money transfers, access to technology, then it tells you then you're not limited in terms of time and you can use it at any point. So as Family Bank, yes, we've revamped our PESA platform, also our online channels, just to make sure that you are able to support and also do more transactions with our customers. And the good part is that now you find even people now, they're able to transact more, do more business, and also be able to move more. Because remember, even the limit that was reviewed through the Central Bank to 300,000 amount, freeing in terms of charges, now reducing the charges, then it meant now people are being encouraged by the government to shift their behavior toward a certain way. So what does that mean for us? Even in terms of meetings, like I've said, for the business club members who are SME customers, and just to paint a picture, over 60% of our borrowers are actually SMEs.
Yes.
So when I look at that, then it tells me then we are supporting a very key segment within the economy. Then for them to have forums to network, international travel, because we usually organize, were it not for COVID, for within the diaspora space. Also looking at it for them to even to build capacity. Remember I said that there was a challenge around the capacity, the business acumen. Then we organize with the key experts on matters human resource management, matters tax planning, matters even bookkeeping, and also even how to borrow and to repay, then creating that particular forum, now moving it now to the digital space. So basically you find out these are the entities that are thriving.
So from where you're seated this morning, Mr. Ndengo, even as we say, when we talk about the fund, the plans that the family bank, your bank has really for the sector and the way in which you're approaching the sector in 2021, well, when we look at the lending to the private sector, and especially the MSME sector in the country, well, there seems to be a block somewhere. If somebody would ask you, Mr. Ndengo, what would be the magic bullet for us to increase the lending to the sector? What would it start from? Would it start from the lenders in the country, or should it start from sort of making things in the sector tick fast before we change the view that we have for the sector?
Well, one thing that I would say is mission critical is first seek to understand the sector first.
Yes.
And now come up with products that are actually serving their needs.
Mr. Ndengo, I'm sorry to cut you short. I don't mean to this morning, but do you believe, because there has been an ongoing conversation about what we need to do to improve lending to our sector, do you believe that with all these years of conversation that we are making steps to understanding what our MSME sector is and the fact that it contributes to 80% of all the jobs in the country?
Yes, I believe it's doable. It's something that we can do. Looking at it even from the government side, there's a government guarantee to the SMEs.
Yes.
Support some counties where they are giving guarantees to the SMEs and telling banks, you lend, then we guarantee this much, and actually we work together in this journey. Once you have the government involvement and also now the bank coming into play, definitely this is a sector that is bound to thrive. And actually we now move from the talk and now we do the walking and actually transform this particular.
Yes. All right. So can you sort of tell us exactly what you're projecting in terms of lending to the MSME sector this year, and what would you expect to see from all the plans that you have as a bank?
Now, looking at the projections, and this one will ride on the projected economic growth and GDP of the country,
yes,
north of 6%. From a shrunk economy in 2020, then a lot of demand now will come within this space. So we are looking at especially key sectors that are going to even have high demand for access to credit. You've seen now with the opening up of the lockdown, then it means transport has become key. So the transport sector then is going to be finding a lot of demand for the people in asset finance, people within the transport supporting that part, especially even the spare parts, the whole value chain within the transport sector. We're also finding now a lot of demand within the renewable energy and also oil and gas. That's another thing, because now it's the one that powers now even the transport and the activities that we are doing. So that's another sector that we're actually projecting to have a lot of activity and also expect a lot of growth. We also have SMEs who are there. Yes, they are in agri, either in production, in the middle, in the distribution. We have people in manufacturing, we have people in transport, and at the end who are actually doing even the export, not forgetting also people who are doing retailing. Yes. A lot of support within that space is also power a lot. Not forgetting now people in the local business within the local trade. So a lot has happened within that space, and that's an opportunity that we see, we want to learn. And looking at it from the other perspective is that we have people now that are actually in local manufacturing. We are having people who are doing masks. We are having people who are even doing supporting health. We are having people who are even into production, even in milk and other sectors that are actually doing production instead of importing because of the lockdown. And what we saw within the challenge around the international space, then people have become innovative. These are the sectors that we are seeing that we're going to thrive and we actually want to support them more. For the schools, the demand is pretty high. And looking at it from the other perspective, we also want to support them through access to affordable and clean water and sanitation and hygiene. What am I looking at? You find that now with the demand for people to wash hands, you find majority of the schools, they'll need boreholes, they'll need water tanks, they'll need even the piping, not forgetting now integrating meters for the water companies. That is a front that we've taken aggressively to just make sure that we enable people. The other front that you're looking at as we grow now, even the economy, and lend to SMEs. Remember, the counties, we've really walked the journey with them, because now with the devolution and the counties coming into play and looking at what the counties are doing, then supporting them and walking the journey with them, we still continue this partnership. And actually now within our distribution of the branches, the key players that are there, then we partner and also make sure that we leverage and to SMEs more. So in terms of economic outlook, we are seeing lending more to the, looking at it from even the restructures we've done for facilities within the SME space, in excess of 15 billion as a bank for just restructuring these facilities. We see now us ourselves accelerating and growing and lending more to this space. Looking at it there now, we saw in the real estate sector, it was dented, now it's picking up. Then that's a sector now, it's a sector to watch. So basically when I look at that, then it tells us that the lending and the appetite for credit is going to pick up now into this particular space, and definitely moving into.
Pretty much. Mr. Ndengu Simon, thank you very much for taking your time this morning to speak to us here on Metropol Television. We appreciate your time.
And even the second half of the year. Thank you.
Pretty much. All right. On that note, we take a short break. Once we come back, the big question is going to be, is it time to lift the curfew?